Well, it seems to all be about the dollar today. What are you making of the strength we've seen filter through on that front?
Well, Alishia, we had a slightly stronger dollar against the major currencies starting out this morning. In fact, in the last hour or so, the dollar's resumed its weakening trend, and the rand's come back from about 7.48 this morning all the way down to the 7.42, 7.43. We have seen a very good import appetite over the last couple of sessions. So all things being equal, the rand is weakened against the trade basket, and I think that trend will set to continue for the next couple of days, quite frankly.
When we were chatting to Standard Bank earlier this morning, what was highlighted was the fact that despite the fact that we've seen the rand pretty strong against the dollar over the past week, it has been on a weakening trend against other major currencies. So is that important to highlight at this stage of the game?
I think it is for a number of factors. As I said, we have seen very good importer appetite towards the end of last week as the rand strengthened. That's one factor to bear in mind. You don't have an endless supply of dollars to feed importer demand. The other thing is there's a couple of internal developments taking place now. The debate sort of seemed to be intensifying around the nationalization of the mines. You've got government interference in the telecom sector. And a few other factors, and quite frankly, the South African economy is not looking very bright at the moment, and that's feeding through into fiscal, the fiscal policy. So things are not as rosy as they would appear. And we must just bear these things in mind.
That on the local front. On the global front, are things as rosy as they appear? Because one of the major reasons behind the selling pressure we saw on the dollar had been the prospect that US interest rates could remain low for a while. Is sentiment really starting to shift there?
Alishia, I'm not of the opinion that the global economy is really rosy at all. We've seen equity markets run up quite dramatically since the middle of March, but there's still a huge amount of problems that the global economy is facing, not least of which is the employment or the unemployment situation, and how that's going to feed through into consumer sentiment and consumer demand in the US. It's very difficult at this stage to see how we're going to come out of the slump that we've seen, and I do expect in the medium term another shock on the equity front and some risk aversion to creep back in again.
So despite the comments by US Federal Reserve Chairman Ben Bernanke late last Thursday that policy could be tightened as recovery takes hold, are you saying that it's still too premature to be taking things that far just yet?
Absolutely. Until we see some growth in employment and we see some positive numbers coming through on the non-farm payroll side, I think the consumer will remain beleaguered, and far too soon to start talking about exit strategies and interest rate hikes.
With that in mind, what are you looking at for the rand as we progress through this weekend, where Absa Capital already this morning said that risks are for the local unit to push as high as 760 today?
Yeah, I think that sentiment came through as we saw the dollar strengthening on the back of perhaps earlier interest rate hikes coming across the globe. But as I said, we've seen the dollar resume its weakening trend and move down quite strongly against the euro. I think the rand will remain in that 735, 750 band for the foreseeable future. But I said we've got to watch those other factors coming through as perhaps the political intervention story gains some momentum.
Of course, local data is rather scarce over the next few days, but international releases are concentrated in the latter half of the week. So what's your outlook then? What are you expecting?
Well, as I say, we're just looking at the importers taking advantage of the stronger rand. That's leaving the market, shorter of dollars as things play themselves out. We're going to need a much weaker dollar, much stronger equity market to drive this rand beyond the sort of 735 level that we've seen recently, and I just don't see that taking place in the near future.
Let's look at some of the other currency plays here. We've got the pound to the dollar. It's dipped below the 160 mark on the back of a broadly stronger dollar as well, but it's failed to react to surprisingly positive UK output data. It's in a very slight narrowing in the trade deficit as well that we've seen come to the fore there. What's your outlook on that regard?
Yeah, the pound has got a few problems of its own, not least of which is a really beleaguered government at the moment. The Labour Party in some serious some problems, and political uncertainty always creates challenges. There was a report out this morning that UK rates could remain very low for the next 5 years, and of course that focuses attention firmly on the economy and why rates would remain that low for that long. and as a result, not a lot of confidence coming through in the pound at the moment.
In the meantime, it's the euro that we're often focused on more steadfastly. I mean, euro dollar flattering at about the 147 level. What are you anticipating there? Because we did see it weaken slightly following the comments out of the Federal Reserve last Friday.
Well, over the last few months, the ECB and the European economy in general has sort of shown signs of stabilization, and we have a very rational central bank in charge there, and that's provided confidence into the market. So the euro is really the darling of the market at the moment. We have broken through that long-term sort of top side resistance at 145. We're at 147.5 at the moment. It wouldn't surprise me if the euro is the currency that continues to perform and move towards 150 in the coming weeks.